Welcome back to Trading Hour. Well, the markets continue to gain with significant gains. The mid-cap, small-cap index both now up over 1.7% each. Well, moving on, Chennai-based Shriram Group and South Africa's Sanlam are planning to invest about 200 crore rupees in their new 50-50 joint venture, Shriram Wealth. They plan to bring wealth management solutions to all Indians with investable surplus. My colleague Yash Jain spoke to Subhasri, MD and CEO of Shriram Capital, and Paul Brendan Hanratty, CEO of Sanlam Group, as well as David Marshall, who's the head of Asia region at Sanlam. Let's listen to excerpts from that conversation.
To be clear, we will only ever do anything in India with Shriram as partners because they've been a tremendous partner for us for 20 years and we've got a very high degree of loyalty towards them. We think now that firstly you've had tremendous growth in the Indian economy for many years. We know that in the not too distant future this will be the second biggest economy in the world behind the US, and we know that it's a natural phase of evolution for asset management and wealth industry to come in the life cycle. And so for us it's a natural phase to get into the development with Shriram of asset management and wealth. We see that as a very familiar journey of developing economies, and the discussions are well advanced. Ourselves and Shriram are creating effectively a greenfields operation to begin in the wealth and asset management space in a joint venture situation, and that's really the reason that we're here talking to you today.
How soon can we expect an announcement on this front? B, what could be the shareholding between the two groups on this venture?
Okay, as far as timeline, I think like Paul mentioned, we are well advanced in building the leadership team, the infrastructure to the business, subject to a few regulatory approvals and certain transaction documents. I think we are very close to getting something done in maybe the next 3 to 6 months. May not require more, okay. Subject to all the approvals. And as far as the partnership, it's going to be a greenfield project. We will like to have, I'm hoping, and Sanlam too, that it be a 50-50 JV. They bring in their expertise of 100 years in this business, and we bring in our domestic local knowledge.
We are at a point where the insurance regulator has also been nudging large companies which have spent reasonable amount of time in the business to go ahead and consider a public listing. Should we assume that this year or at best the next year you would actually start considering the listing of these two insurance entities?
We would like to, at this juncture, I think we would like to avoid putting a timeline to this. I think there can be a better opportunity now ever that we see such phenomenal potential growth opportunity, both in our general insurance business and life insurance business. Both our businesses growing at a rate much higher than the industry, and we see that opportunity continuing for a couple of more years. With a task of that magnitude before us, I would like the teams to stay focused and continue in their growth trajectory. Let the time come and we will take appropriate decisions on the listing process.
So you've not even started putting a thought to it right now, so at least it's some time away. Let's not put a number to that sometime, but it's some time away.
Let's answer, every opportunity, every option will continue to be evaluated.
Okay.
But I think from the business side, the focus is to grab the market right now.
Okay.
Both the businesses are doing so well, I don't think it's the right time to get distracted.
What would come first? You raising your stake in any of the two insurance entities, or a public listing where you pay down your stake?
So to be very clear, Yash, we are long-term investors in India. So in a sense, the listing of the businesses is irrelevant to us. We're here for the long term. We're not trying to unlock value in the short term at all at Sanlam. So, you know, for us, right now, there's no pressing case to be made for listing these businesses. I'm very much in Subhasri's camp. These businesses are growing quickly. We think these businesses can be 10x what they are now.
Okay, David, I mean, if I could just understand more on that stake as well as the investment that would come into the insurance entities after that approval really comes through.
So in terms of the insurance companies, if and when the regulatory approval is received, we will be at just over effective stake of just over 50% in both the insurers. I think it's about 54% in one and 52% in the other. In terms of the investment that we're making now in the greenfields asset management and wealth management, that is around $50 million.
Okay.
$50 to $60 million in total. Once that gets regulatory approval, that's the scale of the greenfields investment we'll be making.
Okay, makes sense. Subhasri, one question to you. As far as the concerns around unsecured lending in India, which got elevated in the recent past, are those concerns still remain as strong as they were about 4-6 months ago, or have they come down? Also, what kind of growth do you see on the lending side and the asset reconstruction side? Of course, that was a new business as well. Growth on both these sides.
So on the lending side, I think unsecured loans, I think it is turning the corner. With a little more budget emphasis on consumer spends, I think we are on a much better ground than 4-5 months ago. But for specific to Shriram, I think it's a fact that we are not significantly or very little in the unsecured loan, or very irrelevant percentage. The larger part of our balance sheet is in the commercial vehicle and automobile sector financing. I think there we are in very, very good ground, considering that we are from the largest commercial vehicle to the two-wheeler. We are in the entire spectrum of the industry, and almost all our customers are business end-use customers. It's not so. It's most of the assets are earning for themselves, not just the borrower. The assets themselves
Correct.
provide the earning. I think we are on a good track, and I think growth potential in that credit business continues to be sound, and very significantly important is size of Shriram and the entities. We are able to get access to funding as well. So it's a two-way. Our liability is equally well strong position to support the asset growth. So that's something we are very happy about.
Okay, an interesting chat over there. But with that, we're absolutely out of time on this edition of Trading Hour on CNBC-TV18, leaving the Nifty at 22,900 levels, and mid-cap, small-cap continue to outperform the benchmark indices. But with that, it's a goodbye from Vivek, myself, as well as the team who put this show together. Don't go anywhere. You have a halftime report.